From being loved to becoming bemoaned. Today we talk about separations, and they can be messy at the best of time, let alone when you own a property together. We're going to look at the steps to follow whether you're de facto or whether you're married. So let's jump in. So firstly, can you remove your partner when you're applying for a home loan? And the answer is sure. It's a big yes. But the trouble is the bank is required to complete a full assessment on your application once again. This means that you can almost think of it like a purchase. They're going to be looking at your bank statements, your credit score, your pay slips. They're going to look at a number of factors to confirm whether or not you can make payments to the mortgage. So that means even if it's you and your partner wasn't working, you're making all the payments to the mortgage, the bank still must complete a reassessment to approve your loan so that you can take over your partner and put the home loan in your name. Now, there's quite a number of things that you'll also need to enable this process to go through smoothly. Typically, the bank will want to see some type of separation agreement, whether it's court ordered or whether it's a stat dec confirming what the agreed payout is. Before you do anything, it's always important you get some type of legal advice, and you and your partner should agree upon a price or payment as to who's paying what and who gets what, so that when it comes time to settling the property and taking it over, whether it's you or your partner, that process can go through smoothly. And there can be many problems when it comes to divorcing, because it's quite common for one or both parties to stop making payments to joint debts. And this can be a huge issue, particularly when you're looking to refinance. The banks won't consider the circumstances. If you're not paying your bills on time, it's a blemish against your credit score, and it can actually mean the difference between getting your home loan approved and declined. So even if you are doing everything right, when you've got a joint loan or liability, the bank will look at that debt as yours. And even if you're making your fair share towards the payment of the debt, that still goes against you. So be vitally aware and cautious of this. If you are going through the settlement process or if you are getting divorced, be very cautious about this process. You want to make sure you have an open and frank conversation to ensure that all your debts are still being paid on time. The next thing you'll want to do is also inform your bank. So if you haven't already and you're going through a separation, it's best to keep your bank informed as to you going through a separation process. In many cases, the bank will put a hold on any redraw you've got in your home loan account, and it'll essentially mean that if you want to access any additional monies out of your home loan, that both you and your partner will have to go into a branch or call up online to give the authorization to take the money out of the account. So a really good tip there. In most cases, stamp duty won't be payable when you're paying out your ex-partner, but this isn't always the case. And it's really important you get legal advice to find out exactly what's payable and how much, whether capital gains is applicable. So when it comes to applying for a home loan, a lot of times when people separate, they're wanting to get some type of pre-approval first before going through the court proceedings. And this is a big issue because right now, as rates rise, the assessment rate is having a big impact on what people can do. While it might mean that you're pre-approved today, it can take some time for the settlement proceedings to actually occur. It's because you first have to agree upon settlement terms, and secondly, we'll need to go through the courts to get the court orders stamped. And this is a lengthy process. So when you're applying for a home loan, keep this in mind. If you're looking to get a pre-approval before starting the settlement procedures, then it might be a catch-22, because while you might get a pre-approval now to confirm that you can take over the debt, if it takes 6 or even 12 months for the court orders to be complete, then in that period of time, you might find that the bank's assessments are completely different, and it may not be something you can do. So what you really want to do is try upfront to have an agreed upon terms with your partner, so that the only thing you need to do then and there is to get some type of approval with your bank. And I know it's a catch-22. So in most cases, what you can do is talk to your bank or broker to find out what your capacity is. Best to pass through some pay slips, get a copy of your credit file, double check everything, make sure everything's looking good. And then from there, begin the conversation with your ex-partner. Find out where you're going to land. And then from there, once you've got something a little bit more firm, to begin the process of finance, knowing that when you do get it approved or pre-approved, you've only got 90 days where it's valid. And you really want to make the most of those 90 days. Now, if it's an amicable split, the bank in most cases will just need a statutory declaration to confirm exactly the split of assets and liabilities and who's getting what. Providing it's signed by both yourself and your ex-partner and witnessed correctly, then the bank can also accept this as a form of separation. Now you're probably thinking, well, can't I just take my name off the loan and be done with it? Unfortunately, it's not that easy. It's a complete refinance process, and think of it like purchasing a home. Once again, a complete assessment's required where the bank will review your application to ensure you can meet the obligations of the new facility. Now, if you have missed repayments on your mortgage, it's best to wait and hold off. Most banks will need 6 months clean home loan history. And remember now with live credit scoring that your credit history will remain on your credit file for up to 24 months. And I can't stress this enough that it's really important that you and your partner maintain your payments on all debt facilities you own together, because it'll impact you both now and in the future. But if there are a few late payments, what you can do is that there are a few lenders, particularly with home loans, that can consider up to 3 months clean credit history. So if you did have 1 or 2 blemishes, providing it's less than 14 days between when the blemish happened and when you paid it off, then there are providers that can still help. And finally, probably the thing that holds most people up is the bank valuation, because essentially this will determine exactly what the bank can lend to you and whether or not you're able to pay out your ex-partner. So bank valuations are critical. And this is completely different to a real estate appraisal, because a real estate appraisal isn't the same as a bank valuation. A real estate appraisal is looking forward, considering what the current market will pay for your home if marketed correctly, whereas a bank valuation is really looking at a fire sale. How much will the bank receive if they had to sell it quickly in 2 weeks' time? So it's critical that a bank valuation is arranged so you can get an idea on how much equity you've got available and whether or not the separation would actually take place. And if the bank valuation comes in too low, it may mean that the only option you've got left is to sell the property and split the funds proceeds accordingly. Now, the general rule of thumb is if you're married, you'll typically need some type of separation agreement, whereas if you're de facto, a stat dec will suffice. But I think the big thing to highlight here is that legal advice is necessary. Is to ensure that you're following the correct procedure, because everyone's circumstances are going to be unique and everyone's situation isn't the same. And if you are separating, there are a few quick tips to follow. Firstly, you want to close off any joint bank accounts and open a separate account in your name only. Next, you want to inform your bank, and if you have any redraw, you want to make sure that you create 2 to operate. This essentially means that the redraw will remain the same and remain there, but if the money is withdrawn, that you'll need authority from both yourself and your ex-partner to take the money out. Next, you want to change and update all your PINs and passwords so that they're unique to you. And finally, you want to begin the process of transferring all the debt out of joint names into individual. And here at Hunter Galloway, we're mortgage brokers that help people with home loans. So if you're going through a divorce or need help with the home loan, visit us online at huntergalloway.com.au or call us on 1300 088 065. Thanks for watching, and until next time, I'll catch you then.